Hello, and welcome to my channel, The Entrepreneurial Mindset. My name is Jay Berman, and I am your host. And today I'm going to discuss internet sales taxes. So I will cover what is a sales tax and who actually pays it. I will talk about the Supreme Court case, South Dakota versus Wayfair Incorporated, decided in 2018, that established internet sales taxes. I'm also going to talk about the economic threshold and nexus required for you as the online retail store owner to collect the taxes, and some recommendations on how to handle sales taxes. So what is a sales tax and who pays it? The sales tax is a tax on goods you purchase, usually at a store, such as a grocery store, clothing store, shoe store, those type of places. So a good, if you think about it, is something that you physically own. You take ownership of. So clothes, groceries, food, cars, furniture, those type of things. Sales tax, depending on the state, ranges anywhere from 3 to 11%, but it usually falls within a range of 5 to 6%. There's usually no sales tax on services. There are some important exceptions. If you own a restaurant, you will charge a meal tax, which is a sales tax for when you dine. When you buy tickets at an event, such as a Broadway show or a concert, you'll pay a sales tax on tickets. And also, if you stay at a hotel or motel or resort, you'll pay some sort of a lodging tax, which is a form of sales tax. So who actually pays the sales tax? Again, it's what we would call the end user or the owner of the good that is purchased. In most cases, that's going to be you or I. It's going to be the retail customer is going to be paying the sales tax. The retail stores, they just collect it and then they send it to the state. Now, before June 21st, 2018, you had to have a physical presence in that particular state in order to collect, where you were required to collect sales taxes, which was not difficult before the internet, because you had to have a retail store if you wanted to sell merchandise. So if you let's say you were based in Idaho, and you would have to have a store in, let's say, Wyoming or Utah in order to collect sales taxes. However, all that changed on June 21st, 2018, in a 5-4 Supreme Court decision. The Supreme Court decided that they eliminated via their decision the requirement that a remote seller had to have a physical presence in order for a state to impose its sales tax. And a remote seller, of course, would be someone who owns an online store or an e-commerce store. So in essence, the Supreme Court permitted internet sales taxes from remote sellers meeting a state's economic threshold and nexus requirements, which I'll explain in just a second. So what is an economic threshold? So an economic threshold is the sales revenue or number of transactions, or actually it could be both, that the state requires a remote seller to collect sales taxes if they sell merchandise in that particular state. Once a retailer, a remote seller, establishes the economic threshold, the state considers you having a nexus in that state or a business presence in that state. If that's the case, then you are required to register for a sales tax or resale license or permit with that state's Department of Revenue. And once you register, then you have to collect and remit sales taxes to that state's Department of Revenue. Now, some states don't have a sales tax. So that would be Delaware, Montana, New Hampshire, and Oregon. So if you sell to anybody who lives in those states, you don't have to collect sales taxes because that state does not require any retailer to collect sales taxes on behalf of the state. The other states have their own economic thresholds, and there are several of them. This one, if you sell $100,000 or more in these particular states and Puerto Rico, you do have to collect sales taxes. You do have to register as a retailer in that state. So in the states of Alaska, Arizona, Colorado, Florida, Idaho, Indiana, Kansas, Louisiana, Massachusetts, Missouri, New Mexico, North Carolina, North Dakota, Oklahoma, Pennsylvania, South Carolina, South Dakota, Tennessee, Washington, Wisconsin, and then of course Puerto Rico, you do have to collect sales taxes from anybody that you sell in those states. But again, under the assumption that you sell at least $100,000 worth of merchandise within a calendar year. The other threshold is $100,000 or 200 transactions in that particular state. So, for example, Arkansas, Connecticut, District of Columbia, Georgia, Hawaii, Illinois, Iowa, Kentucky, Maine, Maryland, Michigan, Minnesota, Nebraska, Nevada, New Jersey, Ohio, Rhode Island, Utah, Vermont, Virginia, West Virginia, Wyoming. So in those states, if you sell at least $100,000 or more, or have 200 transactions or more, that state considers you having a economic threshold, a nexus, a business presence in that particular state, and therefore you do have to collect sales taxes. In some states, have a $250,000 threshold. It's just two, Alabama and Mississippi. The other next threshold is $500,000. That would be California and Texas. And New York is kind of unique because they require a threshold of $500,000 or 100 transactions. So if you were to sell in every state, plus Puerto Rico, plus District of Columbia, you would need to be selling $6.3 million to achieve nexus in every state, plus Puerto Rico and District of Columbia. So we're talking a very, very large sales volume. So if you're just starting off selling on the internet, you probably don't have to worry too much about sales taxes outside of your home state. But if you do get big enough, yeah, you would be required at this sales volume to be registered in every state. Now, generally, registration for sales tax licenses or permits is usually free. There are some states that require a small registration fee. It's anywhere between $12 to $100. It's not a lot of money. It's renewable every 2 to 3 years, and that's dependent on the state. These are the states that do require a registration fee: Arizona, Colorado, Connecticut, Hawaii, Indiana, Nevada, Oklahoma, South Carolina, West Virginia, Wisconsin, Wyoming. Now, here are some of my recommendations on how to handle sales taxes, because you do have to keep track of them if you are collecting sales taxes from your customers. It's probably a good idea to learn Excel, Google Sheets, or QuickBooks to track sales taxes that you collect and that you pay to that state. If you feel overwhelmed, certainly hire a certified public accountant, a CPA, to help you track sales taxes that you collect and pay. You should probably be become familiar with your state's Department of Revenue. They have sales tax and retail sales, resale licenses, and regulations. Because if your state does have a sales tax in your home state, you will be required to collect sales taxes regardless of what the threshold is, because you live in that state. I mean, it makes sense that you have a physical presence in that state, even though you don't have a store per se, and you may not have a warehouse per se. Let's say, for example, you own an e-commerce store or an online store, and you're managing outside of your kitchen. Your inventory is in your garage or in a storage shed or in a storage place. It doesn't matter. You don't have to have a physical store. Just being in that state with merchandise requires you to collect sales taxes in your home state. So that's not necessarily a bad thing, because then at least you'll understand the administration that's required to collect sales taxes from your home state's customers. It's probably a good idea to make sure that whatever shopping cart software database you're using, that it's equipped to be able to calculate sales taxes, at least for your home state, and possibly in the future, every state, including non-states like Puerto Rico and the District of Columbia. So that's all I have for today regarding sales taxes. If you have any questions or comments, please use the comments section. Please subscribe to my channel for more educational content about entrepreneurship. And I thank you for watching.